This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro, and what I want to do today is continue on this kind of theme recently of what I've been trying to do is give you really good examples in real time of what can be applied by using my book as well as the course. And this video today, I'm using micro time frames, a 2-minute and a 30-second side-by-side in the Spider. And again, I don't want to scare away the guys that are looking to do longer term investments, because you can take any 2 time frames side by side. The guy I learned this from, you take 2 time frames, you put them side by side, and you literally could trade anything this way in any 2 time frames, as long as there's, like, for me, the way I use it, his actual time frames were a little bit closer together. Mine are a little bit farther apart. I use a 1:5 or 1:6 ratio. As long as you have that, you can do this in any 2 time frames that you want. I want to show you how I think you could get in and out of the market in terms of like a scalping approach if you want, but what are the major things we want to be looking for? And so let's go ahead and get into this. So I've got, again, a 2-minute on the right, a 30-second on the left. And I'm going to start with the 2-minute chart because I want to show one of the main things that I look for is I love this parallel look here or here. You see how I drew in, I actually overlaid lines on top of the moving averages because I want to see, do they look like they're parallel? And when that happens, we know that as long as they stay like that, we can just take repetitive trades over and over again, and you can use it sort of as a scalping technique to get in and just take one leg, just take a leg out of the move. You don't have to turn it into a big trend trade. The other thing I would tell you is that when you start to look at the pattern, so obviously I say if this line is rising and this line is rising and the price is above, we have a trend in that time frame. So the 18 is above the 40 and both lines are rising. But I want to go down to the MACD and the ADX, and I want to get confirmation. And you see how when this moved up and pulled back, at that point MACD did not confirm with the new high, and we had a miserable action in the ADX line as it was dropping. But once this started to move higher, we got confirmation here and confirmation here. So I could look to play a pullback here. Even though these don't have that perfect parallel look, I could look to play this pullback. Now, when I see this happen and they're not perfectly parallel, I'm usually going to try and play it for a single leg most of the time anyway, as opposed to looking for a big kill, because normally when you're going for these big trend trades, these lines will have a little bit more of a parallel look to them. So this ended up going up one leg and then reversing back down. So I wanted to point out also that sometimes they're not parallel. You see how these don't have that parallel look, but it's the first signal here, and you're breaking below. I'm not going to show. Let me go ahead and show you. You're breaking below some support, and then you rally back up, and you had confirmation in the MACD, confirmation in the ADX. So you can take that trade. Again, take it for a single leg. All right, so I want to focus in on this period right here, and I want to pull up the 2-minute while I'm looking at this period. So we have that parallel look. We have confirmation on the way down with MACD hitting new lows along the way. We've got a strong ADX condition. We're getting these counter moves, these counter rallies. Now, what I would suggest to you is, when you have this look, we go down to the smaller time frame and we got to meet some certain criteria. I would say that we've got a MACD zero line here and a MACD zero line here. But if you notice, one overran the zero line just a little bit and one didn't reach it. So what is our criteria? Is it actually meeting the criteria for a zero line reversal? Well, I would say for this one, definitely. There's no question when I look at the MACD that it meets the criteria. But there is a couple of fail-safe ways to do this. If you overrun the zero line a little bit and this stays below, the signal line stays below, you can look to see if you get a setup where the 18 crosses above the 40 and the price is above both lines. We had that here. The other thing that I would really take a hard look at is the ADX below both the DI lines is it under 25 and preferably under 20. If you have that and you have the MACD near the 0 line and you have a signal in place, then I know I can take the crossover to the downside and even the MACD crossover to the downside if I want as a operative signal. Now, the second signal I actually think was easier, believe it or not, because even though it didn't reach here, we had this nice little pattern of higher highs and higher lows, and I had a really nice trend line that I could draw. Now, why can I draw the trend line? The reason is that the ADX line got down below both and got low again. You see how that met up? So even though this is a little different each time, if we follow the rules of the ADX and we follow the rules of the trend lines, if we can draw in a trend line, then we can do that and we can take the trend line signal. This is trigger number 1 out of my course. All right. So now we keep going and we could be looking to take another trade as long as the ADX is confirming. You see how the ADX is confirming all the way down, and then look at what happened here. We made a new low right here in price, and ADX did not confirm. That was the first time in the move we didn't confirm. There is no more trading that's taking place here. We're not going to look for any more rallies and play the 0 line reversals anymore. Now, just so you know, that low coincides with this bottom right here. That was the reversal, and that's what we should be looking for when the ADX doesn't confirm after confirming for all of this time. So, I mean, if you can go and look for the times where we have the parallel look, you see how this doesn't have as parallel a look, but look at the strength of the MACD and the ADX. I would consider this to be a little bit more of a parallel nature, but MACD is going in the opposite direction. And I know, I'm willing to miss sometimes when I'm not getting confirmation of all my indicators. But when I have this pattern in place and we can see that the lines were parallel here, so I could take this trade because MACD held and ADX got above 25. And then here, they weren't going at the same. It's not like this where they stayed the same, but they did stay parallel. You see how both turned up? So I could keep looking to play, and then this started to diverge and this started to diverge, so I'm not going to play anymore. I'm just not going to take those trades. And then we ended up getting a reversal here. Market's having a pretty tough time right now this morning. So I actually taped this on Friday for Tuesday morning. So I want you to start thinking this way. In any 2 time frames, look for the parallel nature, look for the MACD confirmation, look for the ADX confirmation, and then go to your smaller time frame and look for these signals. And if ADX is confirming, we can keep playing. The moment it stops confirming, we stop playing and we go look for something else. We look for a different pattern or a different index or a different stock. All right. So keep these things in mind. One thing I want to point out when you're taking profits in this type of stuff. So a lot of times if I'm seeing a continuous trend in place and I'm getting these 0 line reversals and they seem like they're repetitive, what I'll do is I'm taking profits at 1-to-1, maybe even 2-to-1. But if I get a big bar, if I get a monster bar, I'm going to just take the whole thing there. I'm not going to try it for a trend. I'm just going to try and scalp it in a way. I consider it a scalp if I just exit the whole thing, even though there's no sign of a reversal yet. Okay, I'm sort of looking at it like this just got too far away and then we got a monster bar. I'm just going to take the whole thing, and instead of playing it as a trend trade would be I'm going to stick with it until signs of a reversal take place or momentum divergence. That's a trend trade. But for me, a scalp is when you just take an exhaustion move. And I might not take the whole thing because this is pretty orderly. And then look at this pause bar, and then this is the explosion. That's where I want to get out. So a lot of times if I'm trading intraday, I only want to be in for, 15 or 20 minutes. That's ideal for me. I just want to get in and get out, take some money, and call it real hit and run. Get in and get out and go. And if you can do that a couple times over the course of an hour, I think that's golden if you have the time to do it. If you don't, go look for this on a weekly and daily, and you'll find these exact same patterns repeating over and over again. You can also do it on a 60-minute and a 10-minute, and it'll take a little bit more time during the day, but you don't have to sit there at your seat and watch every single tick. So anyway, keep these thoughts in mind. Go ahead and let me know if you have any questions. Thanks.